Sup everyone! So as you can see, this is not a fantastic moment to be in the markets. Bitcoin looks horrible. And I remember that back in December, I said I expect Bitcoin to close the month at 82k. Yeah, that was a bit wrong because December closed at around 87 and a half. So let's just say that my theory, like everyone else's, was wrong. Price moved quite differently than many of us expected. Let's actually take a quick look into January before we look into the outcome for February. So in January, for the first half of the month, the price was actually really good. Like the markets were volatile and we had an uptrend, as you can see here, from the 1st of January up until here, half of the month. So we're talking about around an 11-12% increase on the Bitcoin price for the first half of the month. Now this wasn't particularly easy to trade because there was not a fantastic entry. We actually had a fake out around this level here. This I consider as some sort of resistance and support level. So especially in this area around here, so we had this bounce off here. Obviously price rejected the action, the move. But here, I guess everyone, me included, expected a breakout because the candle closed above this 94-ish level, and in any case it closed above, let's just say, this range overall. So normally I would have expected at least a retest and eventually some movement upwards up until to the next resistance level, but that unfortunately didn't hold. Like the structure got completely invalidated in 3-4 days. It actually went way down below, and after this pretty violent rejection we had around a week of uncertainty in the market. You can see that you cannot really make anything out of this price movement around here, and then second half of the month, bam, we got absolutely smashed. And the crazy thing about this movement is that it's just 3 days, so like the last 3 days of the month completely invalidated any setup, and also invalidated the monthly candle for January because it was supposed to close way differently than what it is now. And it's absolutely crazy because in less than 3 weeks, 2 weeks and a half, we went from 97, almost 98k down to 71 and a half. It's 25 to 27% down. That's ridiculous. So it's safe to say that we are in a bear market. The chart looks horrible no matter how you look at it. This is the 3 days, the weekly looks horrendous, the monthly as well. Like there's just red candles. And to think that the all-time high was barely back in October, which is like what, barely 4 or 5 months ago. Like we went from the all-time high of 125 all the way to 71. So we're 40 to 45% down in 4 or 5 months. This is bear market territory, guys. Having said that, here is my plan for February. So we had 1, 2, 3, 4, 5 monthly red candles, constant sell pressure, no relief at all. Bears just went crazy. After such a strong sell-off, usually expect some bit of relief, especially at key levels, exactly where we are now. But let's look at the RSI first. So the RSI is very oversold. In the 3 days, it's passed below the 30 level. On the daily, it's very oversold, on the 12 hours as well. So this obviously doesn't mean anything by itself, because if we're in a bearish structure, the RSI is just going to keep going down. And even when you have a little bit of relief, the RSI is just going to recoup a massive amount of points. Just look around here. We had on the 1st of February, we had around 23 on the RSI, and the price was actually higher. It was at 77. Now we're at 71 on the same exact level on the RSI. So this per se as an exclusive indicator doesn't mean anything. But the fact that it's oversold on all time frames and it confluences with the fact that we're at this key level could indicate a possible bounce. So this key zone here, this yellow box, acted as a very strong sell wall in the past. You can see here in 2024. Basically for the entirety of 2024, it acted as a massive sell wall, as a massive resistance for Bitcoin's price. Lots of sellers were around this area, around here. And for this whole bullish period here, it acted also as a key support. Like, granted, we only touched it once, essentially, because it's been around here on this level. But as soon as it bounced from this level, which is a very strong buy wall, we had a lot of longs, limit buys waiting around this area. We bounced and we immediately went to all-time highs for the rest of the year. So historically, this should be a very good level for a bounce. As you can see, price still kind of sucks, but we're literally here. Like, we are exactly here in the box. And you can see that the price is already getting absorbed a little bit. You can see the wicks, like it's sort of rejecting the idea of going back. He doesn't want to go back below this yellow box. He just wants to bounce. Bounce, please. And also another confluence, you can say, is the EMA. So as you can see on the weekly, the EMA, the 200-day, the blue line, is literally here just below the yellow box. So for my theory, I have 3 indicators telling me that it makes sense to have a long position here and expect a bounce. I have the RSI, which by itself means nothing, but still it confluences well with the other 2 indicators. I have this yellow box here, which historically has been a very, very strong resistance and support level. And then I have the 200-day EMA, which as well usually acts as a sort of moving resistance and support level. And in this case, the price can very well bounce around this area around here. Now, the things that can invalidate my idea is that we're having violent sell-offs, so nothing stops this price from going below. And any bounce that we had in the past, let's say 2 weeks, were very, very weak. So look, for example, at the 4-hour. Every time we touched like key levels, even around here, we had a small bounce like this very long wick as soon as it touched the 81 level. Yes, we did have a bit of a bounce, but it was so weak and it just went down below again. Here as well, as soon as it touched the box, we had a little bounce. And again, the sell-off was so strong that it just immediately rejected the move. This candle here was probably the worst example because it's such a violent sell-off on a 4-hour candle. You can also see the wicks. Basically, the buys tried to absorb this candle here, but they just couldn't. You had a little bit of price movement upwards and it just kept rejecting. Maybe buyers are not interested anymore in buying at these levels because they're realizing that there's still so much sell pressure on Bitcoin that there's little sense in putting bids here. So for now, I wouldn't long. Like, I think it's risky, especially if you do it on derivatives with leverage, if it's not a spot if it's not a spot trade. I will limit myself to put an alert in case the price actually touches here and eventually set up a long position around this 200-day EMA, so around 69k. And if price actually bounces from 69k, so let's put a little indicator here. Let's just say that price goes here, bounces back, the first actual level, like the first take profit level for me will be around here at 81k. 81, maybe let's make it 80, somewhere around here. This line is not extremely precise, but you could see you had a little rejection around here back in November, a little rejection here at the end of January, and then it just went through. So 80, 81, I'd say is a good level to take some profits. We're still talking about 17%, which is still a very, very good trade, especially if you put a very low risk. Like, I wouldn't risk more than 2.5%, 2% around here. And then maybe if I want to risk and leave a very small bag, maybe I wouldn't sell all my position at 81. I will let it run for a bit. Eventually, a second level to take profits is here around the 85. So I've seen other traders with a similar theory to mine, so long around this area here just below the yellow box or within the yellow box. And they've put a target of 90, 92. I think is too optimistic. Like, this would mean a very, very strong demand for Bitcoin, which, let's just face it, it's not there at the moment. So to summarize, my idea was to look for a bounce during February. Now, this bounce might happen earlier than expected because I didn't expect such a violent sell off, and we're barely in the early days of February, so it's the 5th of February, and this bounce might already happen. But I am not sure if this trade is going to play out until the end of February. So let me explain. I'll put a buy around here at 69. I'll take my chances, but I don't think that we're going to reach the TP1 by the end of the month. I think this candle will hover around this area for the whole duration of the month, essentially. So we're going to close within the yellow box, but we're not just going to go above it. Best case scenario, probably we can close this candle a little above the yellow box, or maybe tiny bit below. In that case would be a bit bearish, not going to lie, but this will be more of a long-term trade for me. I would buy at 69 and expect an 81%. It's still a 17%, 18% move without any leverage, without nothing. So yeah, I'd say for the next couple of days, keep a very close look around this area if you feel comfortable in longing or not. I will keep you updated on my long if my bids actually get filled, and I'll see you in the next video. See ya!